Hello and welcome to another edition of Raymond's Empowering Your Practice podcast, where our advisors discuss important issues in healthcare. Today, we have healthcare leaders Don McAnelly and Curt Nurenberg with us, as well as our private equity leader, Erik Schumacher, to discuss current trends they're seeing within private equity in the healthcare industry. Don, take it away.
Hey, thanks, Ashley. And Erik and Curt, thanks for joining us today. Hey, everyone, we're going to have a little discussion here about a really important subject that's impacting a lot of healthcare practices all over. And that's really the impact of private equity and how we've seen it impacting our client base basically all over the country for the last number of years. So, Erik, I'd like to have you kind of talk about, the influx of private equity and how it's transformed, how it started off maybe in a different industry and how it's moved into the healthcare space, be it medical or dental.
Yeah, no, thanks, Don, for that intro. So yeah, being the leader of Raymond's private equity industry group, we're seeing a huge uptick in the amount of private capital coming into our, middle market client base. And, it traditionally has started in those, Midwest industries that we're all used to here in the Midwest, the manufacturing side of things. And as that's continued to go and the high amount of liquidity that's in this market, it is, those investors are just looking for returns. They're agnostic to the industry or to what they're looking at, and it has started to shift into the healthcare world. So you guys are seeing that in your practices. We're seeing it from our private equity clients. And, it's just this general tailwind of the liquidity and the amount of resources that have been pumped into that kind of private capital market. So a lot of companies looking to that as an alternative than, hey, our last line of fundraising was maybe an IPO or something along those lines. Now it's really, there's a lot of alternatives out there and they're chasing those returns. Things I think they like about healthcare is, there's high returns in this industry, kind of recession resilient, demographic tailwinds, healthcare is only rising. And you've got a lot of, more diverse investors looking for a broader range of strategies. So it's never been easier for the common investor to get into private equity vehicles, which has helped fuel that liquidity, seeing multiples at high rates, which is really getting some of these practice groups, I think, interested in looking at it.
So, Erik, these investors are chasing returns, if you will, right?
Yeah. Yep.
And, healthcare space is one that has somewhat predictable in its cash flows, right? Whether it's a dental appointment, you're going once every year, or whether it's a physician appointment where you're seeing a primary care doc, or you're seeing a specialist or a surgeon for something, these things that demographically or some actuarially that you can determine. Okay. So, Erik, it's been interesting. Within healthcare, we've been seeing this impact a number of our specializations. On the medical side, over the last probably 8 to 10 years, we've been seeing it hit ophthalmology pretty heavy. Dermatology has been another one that's been hit. And then more recently, we've been seeing some of the bigger ticket items here. The orthopedic surgery, we've been seeing that a lot. Ambulatory surgery centers, cardiovascular practices are some of the ones in the medical side that we've been seeing. Then really on the dental side, Curt, we've been seeing it go across the whole gamut, right? Whether it be orthodontist, general dentist, endo, or pedio, right? We've been seeing this hit across all different types of specialists. But Curt, all that glitters is not gold here. There's certainly some things that our practitioners have to be looking for, right? And some potential pitfalls that they need to look out for.
Very true, Don. And with that, I probably get an opportunity probably once a week from a client who either spoke with a colleague or went to a CE course or, met with and discussed an opportunity with a DSO organization, and it's the excitement that they have when they look at the numbers. Okay. The organizations do a great job creating an amazing picture. And what I would say is be careful of what's made up of that picture. If it looks too good to be true, it may be. Mm-hmm. And so in many cases, those are projections, so the main items that I tell people is, let's dig into those things. Let's see what they used. Let's, verify numbers, and let's really verify what they're promising, because it's not just the financial component. Okay. Many doctors are just straight out tired. They don't want to run their practices anymore. And when they're told that, hey, we'll take over and we'll run your practice for you, that's not necessarily always the case. In most cases, it's not. Sure, the bill paying will go away and the accounting side of things, managing the deposits go away, but those docs are still responsible for managing those offices. They're still responsible for managing the team, evolving that team, replacing that team if they leave. And if they don't, they end up not being able to run their practice as they have, which causes two things. One, even more stress, but two, in a lot of these transactions, there are practice earnouts, which is part of the financial component that's presented. So it's a high recommendation that the first thing that we do is when we get these phone calls, let's look into the devil of the details of these numbers.
Those earnout. I'm sorry, Curt.
Nope. And I do believe the younger you are, the more important it is to dig into these details, because it's a longer time frame and it's actually more risk that I believe that you endure.
Curt, those earnout calculations can be pivotal in this whole transaction, right? You mentioned painting the nice picture for you, and they really do. Erik, you're talking about the money being chased into there. They'll put some earnout calculations to keep you into there, and then they'll have the recapitalization. You'll get some equity in the private equity company, and then the recapitalization of that, which is, who knows what's going to happen with that several years from now when that goes on. But that's another carrot that they kind of dangle out there in front of you, isn't it, guys?
Yeah, no, it's a common approach in a lot of the private equity transactions, right? They want to keep these, in this case, doctors engaged. They're driving value, continuing to generate those returns. And part of that is, we're going to roll over some of that equity. So you're now a partner in our new larger group, which again, I think, Curt, you mentioned it well, and I'm sure you've got some more comments on that, of making sure the devil's in the details. What's that look like for you and your financial picture going forward, and how much of that is outside of your control, maybe?
I think the main parts is, as you are identifying, as you're looking at that, second bite of the apple, and that transactional side of things, you have to look at the operating agreement. I think too many docs will focus in on the one part of the transaction, which is more or less what's happening with their practice, but they really have to get the operating agreements and other items that they'll be signing as they enter into the new relationship with the organization. Those operating agreements will, pretty much draw out and provide the mechanics as far as what, how, and when, and most concerning, if you can get that equity back out. So that's a very big thing that not a lot of people are doing as they initiate the process. They're not looking on that back end. They're listening and they're hearing the great promises and the great details. And it's one thing to encourage them that they got to dig into those details.
Hey, Curt, one of the things that I've seen with practices is really the loss of control, the loss of autonomy within the practice. You mentioned some practitioners, they look at it and they say, you mean I don't have to deal with as many, or they perceive they're not going to have to deal with as many HR issues on the upfront. Okay, that's perceived to them to be a positive for them. But I've seen it with many of our clients that they're being asked to cover clinics in different areas. Okay, they start off by saying, we're not going to change your practice at all, but then they're making you change some of the supplies that you have within the practice. Perhaps they're making you change some of your staff within the practice. You could, if you had an RN staff model in your medical practice and they're saying, wait, we're going to move to MAs. Okay. And I suspect the same thing can happen in the dental world, where they might make some changes there in how a practitioner goes about their business.
It does. And actually what's happening is, even within these models, they're actually buying or creating their own labs. And so you're actually not forced is a strong word, but you're heavily encouraged and incentivized to use the internal labs as well, which if you're a practitioner, the quality of work that you do is one of your greatest prides, is why is other than taking care of that patient is a very high level of concern. And so that can be a stressor, and as well as changing the practice management system. You're used to, most offices are both digital and paperless, and it's, click, 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 make your notes, do different things. Imagine, turning your world upside down just a little bit and, hey, you're going to do it this way now. You're going to use a whole different system because they do on all their offices on a similar platform to be able to do all that.
Curt, definitely some issues to be concerned with, but there can also be some things where a practitioner may want to do this, right? there can be some
100%.
good reasons to do this. Let's talk about that for a little bit.
Sure. I look at it as individuals and practitioners are reaching, are approaching that close to that retirement mode, or that time that they want to kind of phase things down, or look about what's coming up in the next 5 years. It's a perfect opportunity to, take the risk, remove the market risk out of trying to look at transitioning your practice, 3 to 5 years down the road. And at the same time, capitalize on the trends and opportunities. So, I mean, financially, if you're, 3 to 5 years, 6 years out, this is an incredible opportunity to take advantage of what's there, and without as much on the back end as far as troubles coming down the road.
Similar, Curt, in our healthcare space. I'm sorry, Erik, if I could just add this in our healthcare space a few years ago. When we saw older practitioners leaving. One of the things that they didn't want to do was manage a bunch of charts in a post-practice environment. They were able to sell them to hospitals here. So this gives them a little bit of flavor there, not having to worry about the management of their practice as they're getting more towards the end. So Erik, what kind of thoughts did you have?
Well, I was just going to build on what Curt said. It's a generational shift as well, right? We're seeing a huge opportunity of companies that are willing to entertain the high valuations that are out there across industries because of the aging generation approaching that retirement age. And I think, Don, in a separate conversation we've had before, you've mentioned maybe a different appetite of younger docs, younger entrepreneurs, and what they want either in life or in the business, and maybe not having the same appetite and wanting to be an owner is what we might have saw in some of this older generation.
Yeah. Definitely seeing changes in what's happening within healthcare. Curt, you and I have had the opportunity to work so closely with our clients for the better part of 20 years. We've seen so many significant changes happen over that 20 years when some went away from MSOs back into private practice, acquired by hospitals. Now we're starting to see some practitioners in the medical side leave the hospital and go back into a private practice environment. Really seeing some waves that tend to happen. And really it's staying on top of those waves, and maybe private equity is another one of those waves. But guys, I really like to thank you for this opportunity for the three of us just to sit together, just talk about what's happening within the healthcare space with private equity. So thank you very much for your time.
Thank you.
Thank you.
Don, Curt, Erik, thank you so much for sharing these great insights. This concludes this edition of our Empowering Your Practice podcast. If you haven't already, please be sure to head to Raymond.com to subscribe to our healthcare communications so that you can continue to receive updates that are important to you and your practice. If you have any questions, contact your Raymond advisor or email us at info@raymond.com. Thanks again for listening and have a great day.